Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probability for the next potential move here on this pair. Now, starting from the monthly time frame, what we must notice is that we have a market which is currently approaching a quite strong level of previous monthly resistance from which the market created this rejection to the downside, which now that the market has broken it to the upside is currently acting as support. Now, as the market is testing previous resistance turn support, we could expect a potential rejection to the upside away from this area. So on the monthly, everything looks very bullish. Dropping down on the weekly, what we must notice is that from a weekly perspective, the market is currently heading towards quite strong previous weekly resistance from which all this previous move to the downside was created, which is currently acting as support here. Now, as the market is approaching this previous resistance turn support, we could expect a test of the area and then to see from here a potential rejection to the upside. We can also notice how in general, if you have an impulse and you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.382, which is currently lining up perfectly with this previous resistance turn support, creating confluence of support at this area, which we could in fact expect this market to test and then potentially to reject to the upside. Going down on the daily time frame, what do we see? Now here on the daily time frame, first of all, I did speak about EURUSD quite a few times in the past. I spoke about it after this impulse. I explained all the reasons for which we could expect first a correction and then more bullish continuation, which is what the market gave us. Then I spoke about EURUSD again after the market created this impulse and correction. And from here, I explained why we wanted to see the creation of this higher high. And in the very last report, in the really last analysis that I made, I explained why a break above this high would mean that we could expect more bullish continuation, but until the market remained below this high, it could easily reject to the downside, which is what in fact the market has just created. And by the way, I will link in the description all these previous analysis so you can go and check them out for more free education. Now, what we can see here is that in creating this move to the downside, the market is also currently printing an M pattern. Now, in general, after the creation of an M pattern, what we could expect is a potential rejection to the upside for the completion of the M pattern at the neckline, which is the previous support turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the euro, we can see how net positions are continuing to getting increased from an institutional perspective. We went from having 143k net positions all the way up to 173k net positions, showing how institutions are adding longs and closing shorts. In fact, we can see that with the last report alone, we had 3,300 longs getting added on the institutional side of the market and 700 shorts getting closed. Now, this is making the euro stronger, and you have to keep in mind that all currencies on the spot are traded against the USD. So if you're checking the data for the euro, you're actually already checking euro USD. Now, moving back to the chart here, what we must notice is that in creating this move to the downside, as we noticed previously, the market is creating an M pattern, which is a bullish pattern, which is also approaching that weekly demand and confluence actually of demand and support that we have previously identified. Now, all of these factors combined with the fact that institutions are adding longs increase the probabilities that the market would like to complete the M pattern, has the possibility of completing this M pattern. So how we could be approaching a potential rejection to the upside for the completion of this M pattern at the neckline? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here, you will see that at the moment there is a massive promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to one payment of €97. And also, as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you join the program directly from your student dashboard, and you move your trading there, you can get a full refund credited back into your trading account. And if you scroll over here, you will see that there is still time to join before the offer expires and everything goes back to normal. And directly from here, this is the button to join to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description of this video, and I will see you in my next video. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.